According to a statement made by Elon Musk, lithium batteries are the new oil. That may not sound such a surprising take, considering that lithium plays a crucial role in the rechargeable battery technology needed to power EVs. While Tesla currently sources its lithium from several producers, it is also in the process of establishing its own lithium production facility. Why? Well, the world might need almost 6 million tons of lithium by 2030, and it's not clear we can mine it fast enough. So one particular stock that I want to talk about today is Sigma Lithium. Sigma Lithium touts itself as being dedicated to powering the next generation of EVs, and it must have pricked up Elon Musk's ears. Earlier in the year, there were rumors Tesla was mulling over a takeover of the São Paulo-based firm. Sigma has been ramping up productions at its Garota do Cirilo project in Brazil, which it brought to completion without any major hiccups. Sigma recently maintained its outlook for production of 130,000 tons of the chemical grade 000 green lithium by the end of the year. The company also successfully delivered its first shipment, comprised of 15,000 tons of 000 green lithium and 16,500 tons of green byproducts at the end of July. Several near-term catalysts ahead underpin. You have an analyst at BMO's, Joe Jackson, who's positive on Sigma's thesis, while the analyst makes the case that all the M&A talk might be more than just that. He adds, "To us, it continues to appear that management is a willing seller." Jackson went on to add on the matter, "We assume there is a process underway through perhaps potential acquirers still need to see a little bit more to pay the price management wants around the operating cost profile, grade quality, and ability to dry stack tailings." Jackson rates the shares as outperform, while his price target of $48 suggests upside of potentially 50% from current levels. Other analysts on the street, the average consensus is for price target to hit $48. Now, before we get into the charts, Sigma Lithium is going to trade along with the price of lithium prices. Now, this is a chart going back to 2018 of lithium prices. And keep in mind, from 2020, when the world shut down, including mines, including lithium mines, it quickly became a supply shock as EVs continued to be sold. Again, lithium goes into the batteries that power the cars, and you can see how price rose sharply. Until the economy opened up, the lithium mines started operating. New mines are underway. So then you had supply catch up with demand and price sold off, along with commodities in general because the US dollar went up. So it looks like lithium prices are testing this most recent pivot low, and we're going to see how that matches up with Sigma on the charts. So this is the monthly chart, and you can see all-time highs are near the $44 level. You can see price collapsed in August, potentially on earnings, but buyers saw it as a bargain and selling at a discount, and we are near all-time highs once again, roughly $6 off. So if we go to the weekly chart, we didn't quite fill this gap, but this is a classic drop. You have a hammer candle, a couple of basin candles, and then the rally higher. I'm looking at this level here. Resistance, resistance, resistance. Could be resistance again at the round hole psychological number of $40. So your upside at the moment is limited. Best level to go long was at near 30. Let's go down to the daily chart. You can see how price broke this short-term downtrend line. Retested it after it was breached and closed above. And then you had a gap higher. I'm not sure on what news. Now you did have a gap fill at 30 on significant amount of volume. Just trying to see what the next level of interest is. Down at 18. But I don't think price is getting there anytime soon. So what's the play? Ultimately, you want to see prices breach and close above this resistance, establish new all-time highs, pull back to the $40 level before resuming the uptrend. Thanks for watching. Subscribe, please. Like the video.